Hello, everyone. This is Sergio Morero. We're here with another episode of Rebel One Live with Anna Mann, who is principal at Cultivation Capital. Thanks for joining us, Alana.
Yes, nice to meet you. And excited to connect.
Yeah, so today we're going to hear about Alana's story, but before we do, I'll share a few highlights. She was a graduate is a graduate of Vanderbilt University. Started her career in merchandise sales, Saks Fifth Avenue, before working in venture capital at Jet.com. Was a founder herself before making her way to being an investor, and she'll share more about that story and her insight in the B2B enterprise space. But if you can share a little bit with the audience on what is Cultivation Capital.
Yeah, of course. So Cultivation is an early stage venture fund. We're a distributed team, but most of our team is in St. Louis. I'm based in Nashville, and we have some GPs who are also in the Southeast as well as in Chicago. And a lot of what we do is around a few investment focuses. So we have a team that looks at life sciences. We have a team that looks at geospatial. We have a team that looks at tech funds. I'm on the tech funds team, and we also have a team that looks at agriculture tech. So we do a lot. And the tech funds team specifically, we look at enterprise SaaS opportunities we call it the late seed, early series A. And so excited to dig in more in terms of what our kind of stage and fund thesis looks like as well, for sure.
Thank you, Alana. Yeah, if you want to dive in right now and share more on what types of startups do you look for, definitely the geography is clear, but is there a certain stage and check size that you focus on?
Yeah, of course. So the way that we like to think about it is on the tech fund side specifically, companies that have established some sort of revenue traction. And so their early revenues show that you're on a clear path to 1 million in ARR. So for us, we really lean into and are most excited about recurring revenue and true kind of enterprise SaaS models, which then sometimes could be predictable revenue, but again, it goes back to, are you on that path to 1 million in ARR? What is kind of the month over month growth, right? As well as in terms of check size, we usually say our first check can be anywhere from 2 to 3 million. And again, that's coming in kind of at a true late seed. Sometimes we'll do seed extensions, but most of the time it turns out to be an early Series A round.
Got it. And do you want to share a little bit about why do you choose? What was the strategy behind that? I know you started a little less than a year ago, but giving your insight, why is it late seed 2 to 3 million strategy at least in these types of startups in the Midwest?
Yeah, of course. So for us, we're really excited about undercapitalized geographies. So sometimes that'll mean founders who are building in either kind of the Midwest. So when Cultivation was started in 2012, a big part of the thesis was, founders in the Midwest were really struggling to raise capital. And so how could a fund out of the Midwest provide capital and provide that community and ecosystem to help those startups kind of scale beyond the seed stage to that early Series A. And so now we're kind of figuring out how can we apply that model to other geographies. So I'm actually based in Nashville, Tennessee. We have a partner who's based in Greenville, South Carolina. And we also have a venture partner in Chicago, Illinois. So we're really all over the Midwest and all over the Southeast. And we're really excited about, people who are, really capital efficient and scrappy. And able to really kind of build and get to that 1 million ARR. And sometimes we might be the first institutional check that comes in, and it might have just been some strategics or angels prior that came in before us. So we really are looking at kind of companies that have been really capital efficient and focused on, scaling up sales and with profitability like top of mind.
Excellent. And I would love to hear. Thank you for sharing that insight for those startups. And I know the team is very diverse, not only in terms of geography, but you mentioned the focus areas. What do you want to share a little bit of what's your focus area and what you look for?
Yeah, of course. So I think within the tech funds team, we're very open-minded. So I spend a lot of my time looking at fintech. One of the most recent deals that we recently announced is in the ed tech space, but it's marketing tech plus ed tech. So we look at ad tech as well. We spend a lot of time looking at HR tech. I think, just the trends in terms of everyone working remote and future of work is definitely something that we're all really excited about. And then we look at the more kind of typical SaaS models around insurtech, prop tech. We have a lot of team members who have a really strong background in enterprise sales. So for us, we really think, are you selling into enterprise customers now? And if not, like how can we be that value add so that you're able to kind of build out that kind of sales engine and pipeline for growth when you think about getting from that Series A to that true kind of Series B.
Excellent. And if you could share a little bit about your story. I know you first studied political science, and then now you're an investor. So if you can share a little bit about your journey from, going from Vanderbilt and then breaking into the startup world.
Yeah, of course. And don't sleep on political science. I actually have met a good amount of VCs who have said, like, yeah, like I studied political science. So who knows? Maybe there's a subset, a small, sure there's a clubhouse somewhere talking about
it's all the selling. That's what it is. That's
maybe. So yeah, so I graduated from Vanderbilt. Spent a lot of time in undergrad, really focused on entrepreneurship, around kind of tech marketing and all product development stuff. And when I graduated, I kind of had the operating thesis, how could I get the domain expertise to be really impactful someday as a founder? And so I actually started my career at Saks with, if you think about bigger kind of retailers, like how can you learn a lot in kind of a very wide organization that's really built out and has a lot of exposure to cross-functional partners. And so went through their executive excellence program, spent a lot of time kind of in the buying and demand planning office, very analytical and very, very regimented, if you will. And at the end of the program, Jet had reached out about the opportunity to join their category specialist program. And essentially the category specialist program is really focused on, managing P&L, being very scrappy, very entrepreneurial. In kind of the larger org. This was post the Walmart acquisition. So definitely a lot of bandwidth in terms of ability to kind of have, Walmart labs and all of that, those tech teams being able to build out, new products so that you could internally better manage your assortment. So it was a really exciting time to be there. I was one of the first hires on the kids fashion team in Hoboken. So it was definitely a lot of exposure, great way to kind of build up a role and define it for yourself. And, had a great time at Jet. While I was there, I also received a leadership award at the time. I remember the one thing that they mentioned in the speech was about a grilled cheese contest, which if you know me now, I don't even really eat dairy anymore, but I was I was kind of surprised that culture played such a role, but I've always been someone really passionate about, I guess, future of work in that sense and how can people enjoy their work life better. And at my 1 year mark, I decided to leave to pursue working on my venture at the time, which had been, kind of side hustle full time. And with Bearco, really the operating thesis was there was a big moment happening in terms of sustainable fashion with resale specifically, the ThredUp, the RealReal, while having these massive fundraising rounds, these really high valuations around kind of betting on kind of this endless aisle experience, which was driven by search. So if you think about, true kind of luxury customers, a lot of times favor discovery and favor more curated assortments. And so the operating thesis with Bearco is how could I provide that curated resale destination that was really inspirational, aspirational, et cetera. And, worked on Bearco full time for about 8 months and, kind of went through the process of understanding VC as a first time founder, trying to figure out how could I build more relationships, educate myself better. And one of the kind of things I kept noticing is that a lot of my founder friends also were, unfamiliar with what the path looked like, were unsure how to figure out if your business was even a strong fit for VC. And it just seemed kind of outdated and broken. I'm definitely someone who's always gravitates towards if something's broken, like, hey, might as well try and fix it. even if in a small capacity. So then kind of started with Startup Ventures in a portfolio support role. So really supporting some retail tech startups and their ecosystem, figuring out how I could help with business development, strategic partnerships, go-to-market strategy, all of the really important stuff at the kind of early pre-seed days. And then that kind of quickly turned into a true summer associate program. So more time spent on the sourcing and kind of early stages of diligence side, as well as I went through the Going VC investor program, which really provided that community and ecosystem for not just education, but also kind of getting proof of concept on kind of, this is my strategies as an investor, this is how I'm sourcing, this is how I'm thinking, this is how I'm evolving my thinking. And then this past November, joined Cultivation.
Amazing, amazing. I'm sorry we didn't grab you for the RBL1 program that we run before your to help you in your journey. But glad we have you today. And and in making that that shift, I know your background has been, you talk about retail, e-commerce, your startup focused on fashion, and then now you have this B2B enterprise focus. Can you talk a little bit about how you made that shift? What are some of the things that you did?
Yeah, so I think a big part of it was also, at Starter on the portfolio support side, everything I was doing was very B2B. So I think a lot of times people sometimes forget, retail is just an industry like any other that's very outdated and untouched by technology. It could be on kind of the supply chain side, it could be on the marketing side, be on the customer service side. There's so many aspects of retail where there is significant spend. It's a huge industry opportunity that really hasn't been unlocked, and not much has changed even in beyond the past 10 years. So I kind of just really kind of leaned into, what is my core expertise? How can I allow kind of my intellectual curiosity to be excited about new spaces? So I spend a lot of time now also looking at, like I said, fintech. So for me, I think part of when I think about how I can be impactful in VC, it also translates to, how can we democratize access to venture, not just for, the small subset of startups out of, the Bay Area and all of that, right? So because people are building everywhere. And so I think that lends to other verticals, especially when you think about democratized access, not just to capital, but on a broader scale, in terms of fintech and products that are not just, targeting, that one selective group of people in Silicon Valley, right? But startups that are built for more underrepresented groups or groups that might have been historically forgotten when it came time to build out, these new product or enterprise solutions. So I think there's lots of way to think more broadly about how not just kind of my retail background, but thinking through, okay, if this is what your core customers need. And when you think about merchandising, a lot of times you're still building an assortment the same way you might be building a portfolio. And I think a lot of times the two feel very similar in the sense that you have to constantly be watering that garden, right? And so I think a lot of times leaning into the value add and the involvement and support that you can bring is also one of the things that really, I think, stood out when I was, applying and trying to break into VC, because I spent a lot of time building relationships with founders in the space. And it would even in some cases be founders that, that fund might have already invested in. And so it's already, again, not being super intentional about or coincidental in that way, but being very method driven in terms of approach, I think is one piece of advice I'd really take from my journey for sure.
Excellent. And no, I definitely appreciate that perspective on, shifting and making that shift into the space. As you think about B2B SaaS, I think this is an area that there's ripe for investment opportunity, not top of mind for many folks that are investors. What are some of the themes and trends that you're excited about in this space right now?
Yeah, I think definitely e-commerce enablement is a big one. Also, I think, it's interesting when it comes to e-commerce enablement. I think a lot of times people get really excited about payments and kind of the fintech piece, and you start seeing it very quickly where whatever's trendy, it's like that's kind of a lot of people are in that same pond, right? So how do you keep ahead of that, but also be cognizant of what you must know and what you must play a part in versus what might not be the best fit or aligned in terms of thesis and expectations, etc. And so I think e-commerce enablement is definitely one that we're really excited about. We actually already have one investment in this space, Return Logic, which is an amazing company that's really focused on kind of solving for that kind of hurdle, which is returns for Shopify brands. And so I think that's a big piece of the kind of, if you think of from ship to delivery all the way back to returns are such a massive bottleneck that has yet to be solved. And I think we'll see a lot more, we definitely continue looking into that space, and we'll make more investments in that space, as well as, I think even ed tech. I think one of the spaces that is really exciting, and with this recent company we invested in, Element 451, they have really unlocked how to improve not just kind of the length of sales cycles, right? So they're able to sell in quickly and be very scrappy, but they've also kind of figured out who's their target customer and how can they almost rinse and repeat, but continue to add a lot of value and over deliver on that value to customers so that it's a really strong, sustainable business model, and the growth is, exponential in that regard. So I think we'll continue to look at a lot of ed tech that kind of has hacked into ways that you can sell into universities and colleges at somewhat of an expedited rate when you have that really clear value prop. And again, obviously they're still going through RFP, but they have some really strong hacks that I think other startups are going to continue to figure out.
Excellent. And diving into that one, talking about higher ed, and especially now over the last year plus that we've been virtual, a lot of higher ed in terms of commanding the price that they have is because they're in person, but we're not in person anymore. How do you see that space changing when you were making that investment? How did you think about that?
Yeah, of course. So it's interesting. So part of why, so I'll take a step back. So Element is primarily focused on marketing automation to improve kind of the admissions processes. So if you go back to kind of the premise of your question, I think it's kind of two pieces, right? So I think, these more expensive, top schools have very high tuitions and people were virtual, right? So how is that warranted? That's kind of not usually who's targeting. I think those schools usually might have their own kind of admissions office and might have their own built out systems. And so they might not need a tool like Element. Whereas I think, schools that are either, just state universities, all of these larger community colleges, et cetera, they're looking for ways to be more creative so that they can optimize for that top of the funnel and kind of the marketing automation that comes with it. So I think admissions is probably not going to be as touched. I think it's what's going to end up happening is the competitiveness. So the level of personalization, the level of content and expertise that these admissions officers need to portray makes a solution like Element that much more attractive, as opposed to where I think they'll cut spend in other areas. Admissions, I don't think they'll cut that much spend because it's still so vital to the business model. And in some cases, it's more than 70% of their revenue for colleges. So it's really an interesting space because Element has somehow been able to really thrive throughout and not be too affected by kind of some of the downturns that COVID might have caused last year.
Absolutely. And you can almost see how they can apply that to other industries. But even before going to other industries, they can focus on online classes as well. It has nothing to do with whether it's given their product or service So no, that's great. What if you could share a little bit on your how did you in thinking about venture capital and being a venture capitalist in Nashville, can you talk a little bit about what makes the Nashville ecosystem unique, and the area that you focus on, and why you chose that area?
Yeah, of course. I think one of the things that makes Nashville really unique is there's probably at most maybe like 30 funds here. I would say a tail end, definitely less than 30. So you have kind of the opportunity to be building alongside people that you can have really established relationships with, which I think is really unique. I think a lot of times coming from New York, there definitely is the sense of competitiveness, right? Like everyone's trying to competing for the same deals, whereas here it seems like there's a really large sense of collaboration, which I think is unique, as well as people being excited to bring more capital to the ecosystem, because it goes back to our fund's thesis really being on kind of undercapitalized geographies. So how do you apply that same kind of model of, hey, in 2012, when, the Midwest was there, a lot of coastal VCs didn't want to invest in the Midwest. And so Cultivation was established in 2012 to do that, and to kind of really build out that Midwest ecosystem. How do we apply that model to other geographies that might have been, not receiving a lot of capital from coastal VCs? But again, we want to be on kind of your cap table. We were trying to keep it local and kind of apply that community focus. So I think that's a big part of it, as well as Nashville also has a lot of room for growth. So when we think about opportunities to collaborate with some of the larger corporations down here, some of the academic institutions that have big focuses on entrepreneurship and technology transfer is something that schools are trying to figure out, right? So I think there's lots of ways to collaborate with existing infrastructure, but lots of room to build is definitely one of the big reasons. And then, I went to school down here, so definitely is a city that I have some relationships in. I didn't want to go somewhere completely new, especially obviously since, still things are not fully open because of COVID. So it's been nice to kind of come back to a city that has evolved and changed a lot since I've last been here, but really is really amazing place to be, despite everything, and despite kind of the pandemic.
Excellent. And on the topic of diving into underrepresented investors in VC and founders, what are some of those elements that we can focus on? I know one of them is just having a geographic diversity, which I think your Cultivation Capital is doubling down on, which is excellent. But now as and everyone's getting comfortable, well, not, I would say, most people are becoming comfortable with investing virtually, right? Just meeting a team virtually rather than in person. What do you feel is going to shift in venture capital as things start shifting back to being more in person?
Yeah, I think right now there's a lot of momentum around diversity and inclusion. I think that's definitely a big shift that I am confident will endure. And I feel that the momentum is kind of demanding people to think a little bit differently and maybe step a bit outside of their comfort zones so that we can all kind of build that change together. And I've been very kind of bullish and optimistic on this. So I hate to be proven wrong on that, but I do think that's a big piece that's coming out of COVID and everything being done virtual, kind of the rise of everywhere, and everything that happened last year in terms of George Floyd. So I do think there is a big push towards diversity and inclusion. I think a lot of funds are starting to find ways to be more thoughtful about DEI and not just include it on new investments, but how can we support existing portfolio companies as they build out their teams and ensure that they're not just recruiting more people of color, but working to retain them, and working to ensure that there are, ecosystems and mentorship programs in place so that they're thriving in roles and, companies that might have had to kind of adapt to this new normal and adapt to kind of, training people over Zoom, right? So I think figuring out those things. I also think a big exciting shift is, I feel like Gen Z. I'm I'm not Gen Z, but I really admire them and have a lot of friends who are Gen Z. And I think the just kind of what they're demanding in terms of a more transparent and equitable VC ecosystem is something I'm definitely bullish on and very aligned with. I do feel that that's happening, and that it doesn't just start with, hey, writing checks via Zoom. It starts with, how can you build more kind of humane relationships and ensure you're constantly working to diversify your pipeline. So I think a lot of times I will hear, investors say, oh, well, we just don't see that much deal flow. I think that used to from inbound channels, right? I think that kind of verbiage and that kind of thought process has been very much so debunked, right? I feel I'm constantly on panels where people are talking about, hey, if you want to diversify your pipeline, get in front of more diverse groups and, change your behaviors. Don't, ask someone who comes from an underrepresented background to go out of their way to chase you down. You should do the same. You should be chasing them down as well. And so I think that kind of mutual understanding and kind of meeting founders where they're at has been really accelerated by Zoom and by, I don't want to give Gen Z all the credit, but I do think there's a lot of investors who are being a lot more intentional because of what happened last year in terms of everything around the George Floyd and Black Lives Matter movement, for sure.
Excellent. So for those, for what is next for Cultivation Capital?
Yeah, I think, we obviously, we're on our third fund right now. We're obviously excited about the next fund and kind of figuring out what that strategy will look like. I think we want to, continue to be early stage tech investors and really double down with conviction first. I think we're excited about, like I said, we're excited about ways to, get more diverse founders in kind of our portfolios. We have strong metrics now around that, but how can we improve and ensure that, sometimes it's even as simple as, better tracking, right? So I think there's always ways to optimize our success around that. And I'm someone who's always constantly thinking about ways to improve. And so I think that's also that's shared and aligned with all of our team, right? How can we get better at what we already do? We're obviously doing it. We obviously feel we're doing a really strong job and doing great. Everyone's happy on the LP side, right? But how do we double down and, accelerate and kind of continue to build and continue to innovate? So I think that's a big part of it. Like I said, we also launched a geospatial fund recently. So that's a really exciting new piece. I'm not on that team, but I've been rooting them on, and it's an exciting topic for people who are really interested in. And yeah, I mean, we are constantly launching new funds, constantly launching new, I'd say we're constantly launching new funds, which is a fun place to be.
And can you talk a little bit about that model when you say launching new funds? So is Cultivation Capital a collection of funds, or is it just a specific interest in and focus for a limited period of time?
Yeah, so we are a collection of funds, and specifically, as I mentioned earlier, we have a team that looks at life sciences. We have a team that looks at agriculture tech. They actually have a global accelerator called the Yield Lab. And then we have a team that just launched the Geospatial Fund. And then I'm on kind of the third tech fund, which for us is a $74 million fund, and our third fund out of that group, focused on enterprise SaaS. Mm-hmm.
Amazing. So no, thank you Alana, for your time today. For everyone watching, this is Alana Mann, who is principal at Cultivation Capital. Thank you for joining us. And for everyone that wants to connect to Alana, check out her blog. On the link to her blog and some of her Medium posts is in the podcast notes, and tune in for other amazing investors and CEOs joining us on RBL1 Live. So thanks again, Alana.
Thanks so much for having me.